Hello everyone, welcome to the Ichimoku.co and ForexTrading.tv daily analysis for the US dollar Japanese yen for Tuesday, December 10th, 2013. Well, the sellers have come back into this market today in a minor way, black body candle, which is very significant. It means that we have the sellers gaining some net momentum to the downside. They've made some substantial net bearish progress on the day between the open and the close, as opposed to the buyers who had made a very solid amount for the previous two trading days, so a swing in sentiment to the sellers in terms of momentum. But the sellers have failed to close the market down towards the lows, and it does suggest that they did lose some commitment as they tested down around the Tenkan-sen. The Tenkan-sen, as we know, is an area of potentially strong support or resistance, and here we've seen the area at around 102.50 hold as support. The rejection from there may be significant. It does set the Tenkan-sen up as a potentially important area to watch over the next day or two. The close is only just below the midpoint level, so it suggests that even though the sellers have failed to take control in a major way, the story here is about the buyers losing control. Where they had strong control for the previous two trading days, they made substantial momentum to the upside in terms of the white body candles, and this swing in terms of momentum is to the sellers, but the swing is also away from the buyers. And in a second time frame uptrend and a first time frame uptrend that the market's in, that may be significant and may suggest potential for a change of trend. So we are looking for a lower high and a lower low, but bearing in mind that there may be strong support just below where the market's trading at the Tenkan-sen at 102.50. Now, this is also a potential Japanese candlestick reversal pattern. It's a potential bearish engulfing pattern, and here we have the prior trend, here we have the white body, the black body that engulfs the previous body. It's not quite copybook with the open and the close at around the same level here, but the sentiment here is really quite the same, and it's all about the swing in net momentum to the sellers as opposed to the buyers, and that's what sets up the potential for a change of trend. So we're looking for confirmation of that. With all the patterns, they're never complete until we have that change of trend confirmed, and that would be a lower high and lower low. Now, if the market does trade below the Tenkan-sen, the green line, there should be very solid support coming in around the 101.65 level, and that was this area where we saw that tweezers bottom pattern, and the buyers come in solidly, so we are looking for solid support down below there if the market does come off. There's a potential pattern in play here, a potential double top if we do see that trend change and the market trade down to around these levels, and completion of that pattern would be the close down below this intermediate trough, and that would give us a target even down below the Kijun-sen here, down below the 100.48 level if we do see the close down below that lower trough. But we can't preempt the market. The market may not trade down near that level, and technically this trend has not changed, so we could see buyers come in significantly around the 102.50 area. To the upside, obviously, if the market can trade through the highs of these peaks here, then we do have potential resistance up around 103.75, so the upside here may be limited if the buyers do come back in. In terms of Ichimoku, a bullish market in all three time frames. We're trading above the cloud, the Kijun-sen, and still trading above the Tenkan-sen. So it's significant that the market wasn't able to trade down below there, even though the sellers have come back into the market. The Chica span is above the corresponding price action and is looking a little overextended, so these markets are trading a long way away from these Ichimoku indicators and suggesting a possibility of a retracement to find equilibrium. So that wouldn't surprise if we do see that bearish breakout down below the 102.50 level, but I suggest that if we do see the market break out below 102.50 with early bearish activity, we could quickly see the market testing back down to 101.65. But really what we should be looking here is the low around this current candle and the 102.50 level. They are all important to this market, but also look for the buyers to come back in, because technically we don't have a change of trend even though the buyers have lost control or commitment. So we're looking around these highs, but really probably swinging towards the market trading lower if we can break that 102.50 level.